Welcome to the Armed and Ready podcast. I am your host, Jason Wood, the VA loan guy. We have a really exciting episode lined up for you, so come check it out. Hey, welcome to another episode of the Armed and Ready podcast. I'm your host, Jason Wood, the VA loan guy. Today, we're going to be talking real estate and firefighting. So today we have former firefighter and real estate entrepreneur Seth Teagle with us, and we are super pumped. He's been on a lot of podcasts, and we're excited to learn about his story and everything that he's been doing in the real estate game. So, Seth, thanks for joining us today, brother.
Hey, thanks for having me on. Great to be here.
Yeah, tell us a little bit about the background of in that transition from helping people, saving lives, to now you're the landlord.
Yeah. Well, so interestingly enough, I'm still a career firefighter as of today. So I still work the 24 hours on, 48 hours off shift.
Okay.
My main partner is also a firefighter as well. So we've scaled our company to be pretty big and do pretty well as it sits. But as with anything, as things kind of unfold, you just never know where those lines are going to cross. And at some point, I'm sure the decision will have to be made on whether or not we step away. But right now, as of today, I'm still doing both.
Nice. And how long have you been a firefighter for?
21 years. So it'll be 22 this year. It was right before 9/11. I got out of high school and then started some college, but wasn't really sure what I wanted to do. And always had liked working with my hands. I'd done a lot of construction classes and things like that in high school, and knew I liked that kind of work. And I lived down the street from a firehouse in my apartment, and just kind of stumbled in there one day and was like, hey, what does it take to do this job? It looked kind of cool. And they drove big trucks and had all kinds of cool toys, and talked to the guys that were doing it full time and found out what I needed to do. And that was it. I jumped in. So
that's really cool. What's been your scariest or most challenging moment?
Oh, that's a tough question. I've had, people always ask you well, what's the scariest thing or the worst thing? Or, it's a kind of a weird question to try to answer, but I'd say probably one of the scarier ones or the more close calls is, we had an apartment building that was on fire. It pulled up, it was blown through the roof. I was on the ladder that day, so we had to go. Our job is search and rescue. So me and the other guy that I was with, we went up to the third floor to do a search to make sure that everybody was out of the building. And it was interior stairwell. So as we're making our way up, it's getting hotter, smoke's getting darker, it's banking down more. And so when we got up there, we started forcing doors and making sure people are out of their apartments. And we got into the last two, and he went into one on the left side, I went into the one on the right, and the roof came down on both of us. We kind of gone in, checked the bedrooms, and then we're coming back out when the living rooms and the bedrooms collapsed. That's when we realized that it was that much above us. Made it back out to the hallway, closed the doors, and we're starting to kind of pull some ceiling and look for fire. And the guys on the engine finally made it up there with the hose. And we thought we were making a stop on it, but it's hard to tell when you're inside a building and it's a raging inferno outside, but you're inside and you're like, oh, we're getting it, we're making a difference. And everybody outside's like, we're losing it. And so they finally called us out and said, hey, you guys got to get out. And when we finally got outside and turned around and looked at the building, we realized why they had called us out, because the whole roof was going on this, it was a huge apartment building. So that was one of the closer ones that I don't tell my wife about,
Yeah. You don't want her to force you to quit yet.
Yeah, exactly.
Man,
that was a few years ago, but that was a good one.
That's crazy. So, what would you say, and I'm sure you probably think about this because you're in real estate now, but what would you say is probably, like an apartment fire like that? You've got multiple units and stuff like that. What is generally the source of those fires?
Honestly, the number one source of them is cooking fires. And it's the same with even in a residential house, but most apartments, if they're built nowadays, in the last few years, they're sprinklered. So, you're less likely to have the big, huge fires. But the stuff that you buy that would be considered C-class in real estate, which is like 70s, 80s, even 90s, the fire code didn't require you to have sprinklers in your buildings. They just required you to have smoke detectors. And so when those buildings start on fire, it can get going pretty quickly. And once it gets into the attic of those buildings, most of them have common attic spaces that run a whole, you could have 50 units under one roof, and it gets into that attic and it can run the whole length of the building. And so you end up burning the roof off.
Oh, wow.
Or, like I said, there might be some firewalls in there that'll make it a stop. But even for us, when we pull up, if the second floor or third floor is on fire, one unit, we'll pretty much write off into the firewall and say, hey, these units are gone. We got to make a stop here, because you're never going to, if you go to where it's at right now, by the time you get there and get your stuff and your resources in place, it'll be past you. And so you kind of have to just, you got to make those decisions on the fly.
Yeah. Yeah, man, that's crazy. It takes me back to like that movie Backdraft,
Yeah.
which I'm sure is a little Hollywood of
Oh
what
yeah.
you
I
do,
mean,
but
that stuff happens, but I mean, it's not like as common or as what they show there. Even what was it? The one after that, Ladder 49, I think was early 2000s.
yeah.
Same thing. I mean, it's like any of those things, those shows. If you're in the military and you watch a military movie, you're like, oh, that's not how it happens at all, or that's not what it really looks like. It's all same kind of stuff.
Yeah. Well, the only other firefighter movie I can think of is Chuck and Larry. It's not like that, is it?
No, it's definitely not like that.
um, well, cool. So, you got into real estate. Tell us how that kind of started. What was the initial bug for you to get involved in investing in real estate?
Yeah, so for me, I had been a career fireman for, I don't know, it was probably 13 years at the time. And, most firemen have a secondary job. We work at least the parts of the country that I've worked in, we always worked 24-hour shifts and had 2 days off. And so I was always working something on my other days off, whether it was at another fire department or riding a medic or, doing construction or whatnot. And I found myself kind of in 2013 just working and working and working. And and as I started having kids, and I've been married for a while, 3, 4, 5 years at that point in time. And I think we had my first child was born in 2012. So that would have been about the time that I really realized, like, holy cow, my money is not going as far as I thought it was, before kids. And so I was just working all the time. And I was really started to kind of like, my why for everything that I've always done has been my family and my kids and my wife, and just bettering that whole situation. And so I was like, well, what can I do that will basically help me make money while I sleep? And a friend of mine that I went to college with back in 2000, I went into the fire service. He went into real estate. He was going to become a realtor. That's what I knew anyways. Well, I kind of linked back up with him because kind of Facebook was taking off back then, and
Yeah.
you could kind of reconnect with people. And I found him, and he was this big time real estate investor down in like Northwest Florida. And I was like, holy cow, like this is the guy I had an apartment with. And now he's like a multimillionaire. His net worth was big. He had a huge following doing all this stuff. And so I reached out to him, and he sent me a kind of like a week long course that he was teaching on flipping houses. And he emailed it me as like an MP3. And I listened to it for days. And it just, I mean, I was like, oh my gosh, like this is it. Like it mixed everything that I love doing together. And I really just thought, like, this was how I was going to kind of catapult myself into earning passive income, or not having to be always the one having to work in order to be making the money, right? Because we all only have so many hours in a day.
Yeah.
And most of the time, if you work for somebody, they tell you what your time is worth by the per hour they're paying you, and you don't really get a say in it. And and so it's hard to really I always used to drive around as I was a kid and look at some of these houses with my parents, and I was always like, what do these people do to live there? Like it's
Yeah.
crazy, like to think about that. And so that really kind of got me thinking on like passive income and making money while I sleep, and like how does that all work? And so I just started consuming as much material as I could find, books, YouTube, podcasts, I mean anything.
Yeah.
And I did that for a while until I finally met somebody that was flipping houses, and kind of got involved with them to learn kind of a hands-on situation.
What would you say, that MP3 that your friend sent you, what's something that stuck in your mind or was kind of like an aha moment for you from that audio? Do you remember?
Yeah. So I think two of the biggest things that I took away from there was, like he said, something that a system that he had was, one was systems and processes, but he would always use the same carpet in all of his flips. He would use the same paint in all of his flips. He would use all the same toilets, the same vanities, like, as much as the same materials he could use, that's what he did. And that just kind of automated his system. And so I really thought, if I'm going to have a career and I really want to kind of set this up to where it can be automated, like that sounds like what I need to do. And then the other part of it was that your first deal had to be a home run. He always talked about how, like if people want to get into real estate and maybe it's buying their first single family home or whatever it is, like if that deal tanks or that deal's not a great money maker or you lose money, like you're pretty much done.
Yeah.
If you've saved 20 grand and that's all the money you've got and you're like, I want to jump in, that first deal better work out. Because if it doesn't and you lose money or you break even, you just lost all your, now your momentum is gone. And so that was something that it really pushed me to, when I met the guy doing it in real life, I said, hey, here's an opportunity for me to leverage my time, but reduce my risk because I had time, right? I had 2 days off every third day I was working, but those other days in between I wasn't. And so I went to him and I was like, look, I've got time. I'll work for you and you teach me what you do and how you do it. And I felt like that would reduce my risk because I knew I only had one shot at really like making an impact or making it work. And, again, if I did it wrong or I bought the wrong deal or in the wrong area or whatever, that chance or that opportunity was gone.
So how did your first flip turn out?
So kind of an interesting story. I worked for him for about a year. I didn't make hardly any money at all, but what I gained was a ton of experience and a ton of knowledge, a ton of networking and contacts with contractors and suppliers. And I managed his flips for about 6 or 7 months. And then I transitioned into managing his rental properties. And so I was doing kind of got a taste of both worlds. I realized that flipping wasn't for me because it was like another job. And, again, working a career and trying to be home more, that was not going to be the route that I could go. And then his rentals, though, like I really kind of bought into the buy and hold situation where that was his passive income, right? Because no matter what, the tenants are always paying down the mortgage. So he's building equity. He's making money while he sleeps. If you buy a house today and you sell it in 15, 20 years, you leveraged your 20,000 and bought $100,000 house. And then over the next 20 years, that house is going to appreciate, but the tenants are also going to be paying down the mortgage. So when you go to sell it in 20 years, I would have enough money to pay for college for my kids. That's kind of what I was thinking initially.
Yeah.
So I never actually flipped a house on my own. I never bought a single family rental on my own. I learned what I learned with him and realized that for me, the biggest way to be efficient and scale to where I could be kind of passive was to go into large multifamily. And so the first actual deal I bought was a 50-unit apartment building.
No kidding. Now that's a big bite for someone who's just getting into real estate investing. I think most people would think my first investment property is going to be that single family home or that condo, maybe a duplex, right? But I don't know that, a lot of people are thinking, 50 units. So how did you go from kind of like the average person's thought process of just buy a house and rent it to, no, I'm going for 50 units. And how did you pull it off?
Yeah. So I really kind of, I knew that in order to scale or to become efficient, I had to get bigger, right? The more, if I go to Lowe's and I'm buying 50 water heaters, the price is going to be a lot better than going and buying one. Or if I go and buy, a whole shipping container full of flooring, my price is way better than it is by me going in there and buying 600 square feet or whatever, And so, I realized that, again, going through that year of experience, I saw where I felt like the guy that I was working with was inefficient and where he wasn't like maximizing probably his costs. And then a lot of those kinds of things where, again, my focus was how do I maintain my fire service career and scale real estate to where I'm earning more passive income and, eventually have more equity. And then I just through networking, I happened to meet a firefighter. He was a fireman. He got out of the fire service. He's up in the Cleveland area. He's got about 900 units right now. And I think when I met him, he had about 550. And he really just, he was gracious enough to give me some of his time. And we talked for, a couple hours, various different times. And he was really like, if you really want to do this and you really want to, what you're telling me you want, you got to go big. Because he's like, what happens is you'll get like 1 or 2 rentals and then you're stuck always being like you can't afford to pay somebody to manage your property. So you're stuck being the guy that is the one they call. So you got to place the tenant, you got to sign the leases, you got to show it, you got to go over there and fix the fix the drywall, you got to paint the unit, because you can't afford to pay anybody else, right? You got 1 or 2 single family homes, you're making $300 a month. That's $3,600 a year. you have one bad thing happen and your profits are gone, or the person moves out, right? And you have one tenant, one stream of income on that property. They move out, now you're paying the mortgage. And so
Yeah.
he really kind of encouraged me like to go as big as you can. Like it sounds scary. The numbers are bigger. Right now you're talking $1 million, $2 million, $3 million, which back then for me was like this unfathomable number. Like I had never really thought of, like $1 million didn't even like come into my mind.
Yeah.
And and so talking with him, I was like, well, shoot, maybe there's something there, right? This guy did it and he's just another blue collar fireman. Like if he can do it, why can't I do it? And so I started like thinking about it. And I'm like, who do I know that has money that they can invest with me, right? Because I had my money, but my money wasn't going to go buy a $50 million or 50 unit apartment building. So I was like, who else do I know that has the ability to pull equity or put in money together so we can go buy something bigger? And so I went to a family member that had some small rentals. I mean, he probably had 15, 20 units total, and he had spent his whole lifetime like building this portfolio, but I knew he had a bunch of equity in those single family homes. He had a small 8-unit building in a mobile home park. And I just said, hey, like I kind of did like I pitched to him the whole idea, right? I mean, and I did it up right. I mean, I did a whole presentation like professionally because I wanted to make sure he knew I was serious.
Yeah.
And, I pitched it to him and he was like, man, I wish I'd have thought about that. Like, that sounds great. So I looked for I said, well, let me find the biggest thing that we can buy together and let's do it. And so that's what it was. I found a 50 unit in a tertiary market around Columbus, Ohio, which just means it's like an outer lying. It's not in a metro area. It's an outer lying, more rural, smaller community.
Yeah.
But the price per door was great. And so we said, hey, let's do this. We jumped in with both feet. I ran all the construction. We hired a property management company to kind of do the leasing. He was out of state, so he only came up probably 3 times out of that whole year and helped with anything. And it ended up being a tremendous event for my life. It catapulted me into a whole nother level of real estate investing. So I think in 14 months we made $1 million
No
on
kidding.
that. We forced the appreciation on it to the point where when we had it refinanced, it was worth $1 million more than we paid for it.
Wow.
And so we were able to pull that money out and pay ourselves back and then go buy another apartment building.
That's awesome. And then the cash flow from 50 units is probably a decent chunk of change, I would imagine.
Yeah. So when we bought it, it was like, I mean, based on what the seller had showed us and then how he had running it, it was pretty skinny of a deal, but we knew that, hey, the rents are super low. The people he's renting to are not ideal. They're non-payers. They're, people you got to chase for money. They're constantly being evicted. And we thought, man, if we just renovate this property, where it was at, it was kind of like one where it was in an area that was like a real nice neighborhood. It was at the front of that neighborhood. So it was like the eyesore of the area. And then we thought if we renovate this thing and we do it right, we can attract good tenants that will pay more to come live there.
Yeah.
We always say we secure, clean, answer the maintenance calls when they get put in promptly, and most people will be happy. And so we spent a year turning over that whole complex. I was there every day that I wasn't at the firehouse, doing manual labor, doing the work. I had 5 contractors that I oversaw that worked with me. So they were always there working, and then I was there on my days off. And so it wasn't like, oh, we just flipped the switch and it was easy. But I knew that first deal, there's something that a guy named Michael Blanc talks about. He's a big multifamily guy, but he always says the law of the first deal. And so if you can get that first deal done, whether it's single family, a duplex, a 50 unit, that first one just leads to more. And it's kind of like you build that credibility, you build that resume. And that's exactly what happened. I mean, I knew that first one had to be a success. It was. And after that, just the floodgates opened for us. And we've been, going forward ever since.
That's awesome. Yeah. And you touched on a good point there with, the experience on it. So we, at our company at American Mortgage Network, we have a commercial lending division. I talked to the guy quite a bit who runs it and, run through different scenarios with clients and stuff like that. And his first question always is, what is their experience in managing such and such, whether it's an apartment or it's a gas station or whatever the thing is they're trying to buy? What is their experience with it? Because in the commercial lending world, it functions different than residential lending, right? And one of the factors that it keys off of is experience. They want to know, because that's going to be part of their consideration in your loan terms, how much equity you need to have in it, and so on and so forth, right? beyond the other financial pieces. But experience is a big piece of financing. So, your first deal, unless you have a partner that has experience, your first
Yep.
deal from a financing standpoint, probably going to be a little bumpy, a little ugly, a little more down payment, probably not as pretty of terms. But then once you've developed that experience, then things start to get better for you just in that realm too.
Yeah. And even to add to that, so I went to I think it was either 4 or 5 banks. What you just said right there, I didn't know that when I was in my first deal. And so I had 4 or 5 different loan officers tell me, hey, this deal looks like, initially they were all like, yeah, we'll do it. Looks great. Then it went to the credit committee, and the credit committee came back and they said, the deal looks good. You look good from a personal credit standpoint. And, like you got a good W-2 job, your credit's great. You don't have a lot of debt, your income ratios are great, all that stuff, right? So you would be an ideal person to lend to. And this deal is a good one, but you have no real experience running a property of that size. And so I got, like I said, bank after bank after bank, I got told no, until I finally found one through an attorney that I knew, that they basically they do more rural lending on like farms and kind of like random one-offs that are, they have a little bit more flexibility in the box that they want the deal to fit into.
Yeah.
And then they keep the loan on their books. And so they have a little bit more freedom to do it. And they're not a corporate, they're not like a big bank. And that was the one that lent me the money, and like you said, the first one can be bumpy. So they changed the loan terms on me. Originally it was going to be 20% down. We were a week out of closing, and all of a sudden they came back and they said, it needs to be 25% down.
Mm-hmm.
So I had to call an outside private lender friend of mine and borrow $75,000 to throw into the deal so I could get it done. And I think over the life of that deal, he made, I think I ended up paying him back 90 grand at the end of it at the refi. So he super high interest for him, but
yeah,
I'm like, doesn't matter. It's got to get done.
Right.
And then they gave me no money for construction. Right. So we had to renovate this whole 50 unit. And I'm like, I thought I had enough. I had 50,000 in the bank when we closed. Thought, hey, that'll be great. Until the first round of rent came in, and over 12 people had moved out from what I had when I bought it, I underwrote it. They had I think they had like 4 vacant units. And between the time we closed and the first month that we were going to collect rent, 12 more people had left. Ugh. So I was like teetering on that edge of like, can I pay the mortgage or not? And I didn't know. I didn't expect that to happen. And so having, I always tell people now is like having somebody has the experience can help you drastically kind of sidestep landmines so that you're not going to lose everything. And there's reasons why, like as lenders, that those things are put in place, why they ask those questions, because they probably, if they haven't personally, they've seen, or their bank has seen, where they lend to a guy and the deal goes south, and then they have to take the property back. And like no bank wants to take back an apartment building. I mean, they don't know how to run it. They don't want to run it.
Yeah.
And so they're super stringent. But again, the things that I learned through that first deal was I went in undercapitalized. I realized early that I was undercapitalized. I talked to my friend in Cleveland, who was kind of a mentor for me early on. And he's a great friend of mine now that, we talk, I don't know, every quarter or so. But he was like, you don't have enough capital for this. Like, you're going to do all these renovations, like $50,000 is going to be gone in a month. You need to go get more money. And so through my network and personal friends, I was able to raise about $250,000 to use towards construction. And it's kind of unheard of to get people to sign just like blank balloon notes to you with no, not like basically I can't think of the term right now, but
unsecured, right?
Yeah, they're unsecured. Yeah. They're unsecured notes. And I mean, like I said, luckily my reputation and my character, I was able to kind of cash that in with these people, and they knew no matter what, I'd pay them back. And so, that, like I said, so the first deal wasn't easy by any means. And there was a lot of stuff I learned and a lot of sweat equity and struggle and time I spent down there. But again, when we refinanced, and all of a sudden we put out all this equity and I could pay everybody back plus their interest, and everybody was good, made their money. What we had left over was enough for me to go do another deal. And so that's where, for me, it clicked. I'm like, this is it. Like, this is, as long as I keep doing this and I keep repeating this, I surround myself with people that are doing it and are successful, like, I can't lose. Yeah. And so, like I said, we've just grown a lot since then. But
well, it's really interesting that you share, the struggles with it, because I think for an outsider looking in and they see somebody who owns apartment buildings and things like that, probably the onset is, their initial thought is like, oh, well, they're rich, or they got a trust fund, or they sold something big and were able to make it happen, and while that may not be incorrect in some instances, anybody can get into it, but it's not easy, right? Like, and so I think that's
Right.
cool. I think that's cool that you share those details, because it takes a lot, and the more that you do, the easier it will become, right? Kind of like going to the gym.
Yeah.
First day after working out really hard, you're going to be really sore. But if you keep going every day, eventually you're going to be less sore and get in better shape, right? So same kind of thing, right? Mentality with this type of thing. The first time is going to be hard. It's going to be harder than probably the next few, right?
Yeah. And especially, like I said, like the gym analogies, going to the gym is a lot easier too if you have a partner. If you have an accountability partner or you have somebody that knows their way around the gym and maybe you're new to it and you don't know, it's a lot easier to go with somebody who's been going for years and they can kind of show you, they figure out what your goals are, then they're able to kind of teach you what to do. Or even if you hire a personal trainer, right?
Yeah.
It's the same thing where I tell people, hey, you know what, if you want to get into large multifamily or you want to get into real estate, don't think that it's somebody that's charging you for their time, or they say, hey, I'll coach you or I'll go into that first deal with you, but it's going to cost you XYZ. Like, don't look at it as you got to look at it as an investment and not just like, wasted money, because the doors that it can open for you, you can get to the front of the line faster. Just like if you're going to the gym, you can get bigger or stronger or meet your goals a lot faster if you have a personal trainer or you have somebody that, that goes there regularly, that knows more than you do. It gets you to where you want to go faster by doing that. So
Yeah.
I think it's great to have that.
Yeah, absolutely. Tell me about the construction and the renovation of that first place. I mean, were you in there like sawing boards and hammering stuff, or were you managing a crew, or because I'm sure you had to spend a lot of time overseeing that piece too, right?
Yeah, so I was down there initially. So that was kind of why I got me into real estate, because I had a construction background. Like I said, I had done classes in high school. I'd always done projects around the house. I'd done projects with other guys. All firemen are kind of like in the trades world. They're doing concrete or construction or whatever. And so I had a pretty good background in that. But yeah, I mean, initially it was me and two other guys that started renovating units, and I realized that the vacancy, the turnover was happening faster than the three of us were getting these units done. And I thought, well, man, I got to hire more guys because, and then too, like I was gone every third day. So when I was gone, shockingly, the work that was getting done was a lot less when I was not there than it was when I was in the room with them,
Of course, right?
which is to be, considered. But,
Yeah.
so I thought, well, man, I kind of took a step back of like get the guy hanging the drywall and painting along, next to the other contractor. And I said, okay, well, let me hire, 5 or 6 guys and create a team, just like we do in the fire service, like a team of guys that work together. We can accomplish more, they will be as a team than 6 independent guys. And so that's kind of what I look for. And I created a great team of guys that we had a flooring guy, a painting guy, electrical guy, a plumbing guy, and then everybody just kind of had their phase. And so we'd go in and everybody would go in and do demo, and then after demo we would just have phases where this guy would go in and he'd work in that unit for a day, then the next guy would go in and the next guy would go in, and we'd have all the supplies and we would stage them and we were just able to kind of get it down, and we would just roll through the units a lot faster. And it to do 42 units in a year was a lot, but I mean, like I said, we built a great system to get it done. And then I was able to kind of take a step back and say, where are we inefficient? And if we're inefficient, like what's the inefficiency? And then I could fix that. So I spent my time working on those things, and that made the guys, the workers, that much faster, because when they're like, hey, if I just had this tool, I could do this a lot faster, I'd go buy it. Or if they're like, hey, if I just had this, rather than waiting until the unit's ready before the materials here, like if we just had it staged in these certain areas, like I would do it. Or put it in the unit before we get there, it'd go a lot faster. That's what we would do. And I'd hire like random one-off guys that were manual labor that all they would do is unload my truck. And so I learned a lot in that first one. And like I said, it's helped us scale to where we're at now, because we take those lessons I learned there and we just apply them on a bigger scale now.
That's really cool. And now you got a property manager managing it, and so your hands on that particular property is probably pretty light now, right?
Yeah. So that one, I knew that I couldn't do the construction and the management of it together because it would just be too much. So I gave it to a third party company, which I realized I entered into a contract with them. I thought I had interviewed them well. I realized because I was there all the time that they weren't doing a very good job and they were pretty hands off. And that property really needed to be more hands on. So after my contract was up with them, I let them go. But I had met another guy in the area that was a property manager that he only had his stuff and he was wanting to kind of get into like managing other people's stuff. So, I went to him and kind of pitched him the business plan and said, here's what I want to do and here's how I want to do it. And he bought into it and he's been managing it ever since, the lease up side. So he's got, in his area, I've got 2 properties, so about a little over 100 units down there now that he manages for me. And again, I learned from him too, like how he does things on the management side, and the software he uses and all these different things. And so as we started buying more here in Central Ohio, we created our own property management company to where we have, we employ about 15 people now with that, and we manage everything else that we own other than those, because he just does such a great job that, it's not, my time is better spent buying more properties or making money on my management company than it is going down there and dealing with those, and him and I meet regularly. And so it's still going great. We still own that first one today, and it does very well.
That's awesome. So where are you at today? How many doors are you are under your portfolio now?
So there's a group, the Stream Group is the company name, and there's 3 of us that are involved. And between the 3 of us, we have over 2,000 units. We hold equity in. So again, we don't own 2,000 units, but we own equity in deals where that's the total volume, right? And then
Right.
Here in Central Ohio, we own just over 600 now of apartment buildings, apartment units is what we call them. And so, again, we buy for cash flow, we buy for future equity payouts, and the game, I guess I don't want to say necessarily the game I'm playing now, but when you're small and you're doing single family, you're like, I want to own everything, all that equity's mine, and that's great. You hold all of it, right?
Right.
But if I go into a $10 million deal or a $20 million deal, if I own 10% of that deal, like how many houses, I always tell it to single family guys, how many houses do you have to buy to make what I just made in this one deal? Or how many houses you got to flip to make this amount of money that I made in just one deal? So we're not super transactional, right? We might buy 2-3 places a year, but it's what we do with those that can amplify and explode the value. And that's really where, like I said, commercial real estate is so much different than the single family is. When you own a single family home, as you know, the value is dependent on the market nationally and in your area.
Yeah.
And then it's dependent on, what is the house selling for down the street from you or across the street from you or in the next block over. And all those things can kind of change your value for the good or the bad. So it can be, it can kind of be all over the place. And commercial, we can kind of control the value because, we can force the appreciation by increasing the net operating income of the property. And we do that through managing better, creating new streams of income that maybe the previous owner didn't think of or didn't utilize, and all these different things we can implement. And we can take a property that was, maybe we paid $2 million for it, and a year later we can sell it, or usually we hold for 5 years, but like I said, some we've sold in 2 years, 3 years. It just depends on the market. But it's not crazy for us to take a property in 2 years. It's worth $1 to $2 million more than we paid for it.
Yeah.
And you just can't do that with single family.
What's your long-term goal with the real estate?
It's funny. I don't really have like an end in mind. I guess it's really to get to a point where, we're more passive than we are active right now. My partners and I are like super active in everything, and we're evaluating deals. We buy the deals, we source the funding for the deals, we manage the deal. So like, and it's not necessarily like me doing it or them doing it. We have employees, right? And people working with us that do all the, a lot of the work. But
Sure.
At some point, we might cash out and, if we sell off everything, and I might take what I own and go buy my own 400 unit property, and then my kids are set, I'm set, I can go into retirement. I don't have to worry about Social Security being there. I don't have to worry about a pension fund being there. I don't have to worry about, inflation. That's what I always tell people. That's the one thing that's going to kill everybody is, the rate of inflation. I mean, today it's kind of crazy, but there's no end in sight.
Yeah.
But the dollar you save today is worth 50 cents in 5 years, and you take it back to even like the mid 80s, the early 90s, if you made $1 million back then, it's worth like 10 million today. There's just the value of the dollar is so different. And so the only thing that kind of hedges against that or protects you is buying things that will appreciate with the inflation. And real estate is that best investment vehicle that we use. So something I buy today for $1 million, if I do nothing more to it but keep it paying the debt, in 3 years or 5 years, standard percent we look at is 3% increasing in appreciation, but some markets are appreciating much more than that. And then you also have the debt being paid down. So, that's the thing, right? So sell in 5 years and you make more money, like your dollar stayed this, it held its value or increased versus just putting it in a 401k or a savings account or a money market account or whatever.
Yeah, no, you're absolutely right. Um, Real estate, and we talk about it a lot with clients too, is, the best hedge against inflation, which, you hit the nail on the head. It's high and there's no end in sight to it, right? I mean, we're just going to experience the cost of everything going up. So that's the only way to protect your savings, really.
Yeah.
Investing in the stock market is a strategy. But, as we hit more of an inflationary standard in the economy, then that stock market is probably going to start taking a bath.
Yeah.
So it's good. And the other cool thing, about real estate, as is there's tax benefits to that as well, right? So, not only are you gaining value and return on your money, right? But there's a tax benefit too. And if you factor that into the equity and the passive income and everything else, it just extrapolates and grows that number, right? It makes it even better.
Yeah, 100%. And again, that's why I like commercial real estate, because the interest is tax deductible on residential, but there's so many things that we can do in commercial real estate to advance the depreciation. We can do cost segregation studies. We can do there's all kinds of different things that we can do that will front load depreciation, or even if we don't front load it, right? Maybe it doesn't make sense. Everybody that's in the deal doesn't benefit from doing a cost segregation study, so we don't do it. But it's just the dollar amount that you can write off is so incredible that if, like for us, if we have investors that invested into our deal, but they're also invested in the stock market, and let's say they have a great year in the stock market, they make, we'll just say $100,000 because it's a round number. So they make $100,000 in the stock market, but they got to pay capital gains on that money, right? But then the depreciation that we pass to them through the property, they can write off that against the capital gains, and they end up getting to keep that money tax free. That's basically the way it looks like on paper. And so that's, it's a huge thing to, I'm never going to say the stock market is a bad thing to invest in. A lot of guys will tell you that. I think everybody should diversify. I think that real estate is it's the one I've chosen. I kind of put all the eggs in that basket. But I've got some money in crypto. I do a little bit in the stock market still. I'm not, because everything kind of, there's a balance, and it's kind of like spinning plates. I think that for the long haul, real estate is by far the best one and the most risk free. But like I said, I don't think that if you put everything into real estate as well, I know a lot of guys that do it, and some guys, they do, like me, they kind of diversify a little bit themselves. But I'm very heavy into real estate because I believe in it. And and the thing that we do with the syndications is we give an opportunity for, I kind of like the little guy to get involved, right?
Yeah.
If you're a guy that has worked hard his whole life and he's like, I saved and I've got $100,000 or $50,000, you can get into a deal that we're doing, or some of these other guys that in the country that are doing them, and you can earn all the things that we're talking about, and then you will make a lot more money passively over the life of that hold and that deal than you would if you went and bought 3 single family homes with that $50,000.
Yeah. Well, I think that's you mentioned that a little while ago, and I thought that was a cool point. You're saying, if you end up with, a commercial property that, earns you, $1 million or whatever, like how many single family homes does it take to get to that same number? And it's definitely a mindset shift. And I can totally see that with people where they're like, well, yeah, but if I own the single family, I own all of the equity. And it's like, yeah, but you're talking about an exponent, an X factor of your investment, right? So it might be 50 grand into 2 little tiny homes that net you, $4,000 a year in revenue. And, net equity is, 80 grand or something, but that same dollar is growing at a higher multiple on the commercial because, yeah, you're not the only owner, but collectively you bought something that's larger in dollar amount. So the dollars are growing larger. Even if the percentage growth isn't as high as residential, the dollar growth is bigger.
Yeah. I would, like I said, it's not unrealistic for us to buy like a $20 million property. Let's say you own 5% of it. Doesn't sound like a whole lot, right? But if we increase the value of that property by $10 million, which is not unrealistic. There's guys that buy property like 25 million and they'll increase the value over 20 million. They'll buy it for 20 and increase it 20 just due to the area of the country they buy in, whatever the cap rate is, whatever this, what's going on in the country at the time, whatever the demand is. Like COVID has done nothing but increase the value of multifamily all throughout the country.
Yeah.
So stuff that I bought, even 3 years ago that we've had, I mean, COVID, everybody was scared to death, but we kept on trucking. And then, if you would have, people thought, oh, like a lot of us were like, oh, we were waiting with money thinking that people were going to lose their properties. But then, unfortunately, fortunate or unfortunately, however you want to look at it, the federal government stepped in and printed a bunch of money and gave away a lot of money to people to, get them from not being evicted, but it kept people afloat. So it didn't slow down the growth and the value of these properties. And so, if you own 5% of a property that the value increased by 10 or 20 million, and you're, and let's say gross was 20 million, we netted after sales and everything else, 18 million, right? You get 5% of that 18 million.
Not a bad payday.
No, not at all. And that's what I'm saying is like, and you didn't have to do anything. You could have invested passively in that deal. You never saw the property, you never went to the property, you didn't have to deal with tenants, headaches, any of that stuff. But because you bought in, you bought in at like kind of like the ground floor of a startup, right? You got in on the ground floor of that deal. Then you get paid on your money. We refinance, you get your money back out, and then you earn money over the life of the hold. And when we sell, you get to take part in the upside, which is usually like the sweetest thing to take part in.
Right.
Again, how much work and money and time and, just you have to do personally to be able to make money like that. I would stack it against anybody doing single family. There's guys that have 3, 4, 500 single family homes, they have big companies. I get it. But for the average guy that's out there or gal that's out there,
right,
their portfolios aren't that big. And so even people that have, 10 houses, how much equity do you have in those houses? If you did a cash out refi and took all your money and said, hey, Mr. Syndicator, I want to get in on your deal, or I want to, now you keep those houses, you reset the clock, and you're investing in this bigger deal. And so we've had a lot of guys do that with us too, because they at some point people seem to get it. And like you said, it's kind of like the mindset shifts and they realize that there's other ways to do this besides me just having to be the guy answering the maintenance calls or painting the walls or replacing the carpet and doing all that stuff.
Yeah. And it's funny, like, I've had a couple rental properties over the years, just single family homes, and it was never really worth it, right? When you really do the math at the end, making a couple $100 a month in profit, that doesn't move the needle much, right? That doesn't change my life, $200 or $300, right? And then you got, the tenant that's slow to pay and you got to chase them all the time, or you got to meet them at some random part of town just to get your check because they're behind and they didn't mail it. And, like you start adding in like those hours and then they move out and you go look and it's like, oh, you got to replace all the carpet now because they trashed it. And, like all this stuff for, at the end of the day, it's almost probably a loss on an annual basis. And so really the play there with single family is long-term paying down the debt and that equity gain. But the in-between pain and time commitment for me wasn't attractive anymore. And so I bailed out of the single family game for that reason. A couple $100 wasn't worth all the other headaches. And then if I install a property manager, well, then I'm not making any profit. I'm just only banking on the equity gain at some point in the future. And so anyways, yeah, I bailed out of that. And, I'm a big advocate for, the multifamily and commercial space. And I talk to a lot of clients about multifamily and stuff like that. And I think that that's really where the growth happens in that whole investing game and where it makes the most sense.
Yeah. Yeah. And you don't get any of the tax benefits like we talked about either in single family. That's also part of the problem, right? If you sell that single family home, you're paying capital gains, you can 1031 into something else, but there's just no, especially if you flip houses. I mean, a lot of guys I talk to that flip houses, they'll be like, yeah, I made 100,000 on this flip. Right. But then you had to turn around and pay income tax and all, there's no getting out of that. You have no buffer when you flip a house, you're eating all of that tax. And so there again, it's, how much work did you really have to do? I would beg to differ that the amount of work that we have to do is the same as a guy flipping houses. We're just flipping 50 houses in one shot. And really it's, the size of an apartment building is what, or a building or apartment unit is what I think on our average for us is 1,000 at the high end.
Yeah.
So, we're going in and doing 800 square feet, 1,000 square feet, you go in and do a 2,000 square foot house and you do 5 of those. I mean, again, depending on where you're buying, every one of those is different. So all the flooring has to be different. The fixtures have to be different. The countertops have to be different. The cabinets have to be different. The all that, where like we go in and it's like we settle on one cabinet and we buy 50 of those. We one, countertop, we buy 50 of them. The flooring, we buy shipping containers straight from China or wherever we're getting it from.
Yeah.
At a, we're cutting out the middle people, we're, and so that's where you, like I said, you really start to see the scalability of it. And that's where, to me, that's really where it starts to pay off.
Yeah, no, I agree with you. And I think an interesting book, even though it's not real estate related, but it falls directly in line with what you're talking about with, materials and all that stuff and streamlining the process, right? There's a book, it's about Southwest Airlines. It's called Nuts. And if you haven't read it, it's an interesting read because they're really smart in how they built that airline, but it goes in lockstep with what you're saying as far as, for them, they only fly one model of airplane. So at every airport, they got a stockpile of parts that all work on that airplane. And their mechanics are all experts at that one type of airplane. So airports around the world, if there's a maintenance issue, they got a guy who knows exactly how to fix it, who's really good at fixing it, and he's got the parts right there to fix it, right? And then all your pilots, all the flight attendants, like everybody knows that aircraft inside and out. So your people are plug and play, your parts are plug and play. You can buy parts like you're talking about supplies for these apartment units. You can buy them in bulk, get a huge discount, right? Eventually you're going to use it, right? So it's a really, really cool read for understanding, how to systemize all that stuff.
I've not read that. I'll have to read that, and that's interesting because that's why they can fly so much cheaper than everybody else. And that's why they, because they're based on volume.
Yep.
Not necessarily, you go fly Delta and then you go to Southwest and the plane ticket's $200 cheaper and you wonder why. That's why, because they built in the efficiencies. And, I would imagine that's why anyways.
Yeah. I mean, that's largely it. And they, kind of straying from our topic a little bit, but the other thing was time on the ground, right? So if you ever, you fly different airlines, you'll know, like when you board American or Delta or whoever, you get on the airplane, you get buckled in, you're not even moving for like 25 minutes. You're just sitting there, right? It seems like forever anyways. You're sitting around, not doing anything. The plane hasn't taken off. They haven't even closed the door to the taxiway yet. On Southwest, the time on the ground was another analysis that they did and figured, man, if we can have these airplanes on the ground less, then we're making more money, because when they're flying, they're making money. When they're on the ground, they're losing money. So the less time on the ground, the more money we're going to make. So let's figure out a way to systemize this to get people on the airplane, the bags in there, all the pre-check, all the pre-flight stuff done in a quicker manner, so we're back up in the air. And they just, through analysis, right? Which is kind of like how you were saying you were doing with that first deal with the construction piece. Well, hey, if I just had this part, or if I just had this tool, or if I just had the pre-staged, supplies that I need, I could knock this out a day faster or half a day quicker or whatever, right? Which is all cost savings. So yeah, I mean, it's an interesting book from, to take that perspective away from it, is super helpful.
Yeah, no, it sounds great. I have not read that, so I'll add it to my list. I'm always that's the funny thing too, with like mindset shifts too, is like, I used to drive around and listen to music in the car and whatever, and just kind of never really utilize in my time. And now it's like, I do nothing for years. I've done nothing but books on tape or podcasts or whatever, always trying to, kind of get better and become more efficient. And so, yeah, I'll add that to my list, because I consume quite a few books in a year.
Yeah.
That sounds good.
Yeah. So. Yeah. It's a cool one. It was really, really cool perspective. Well, Seth, hey, I want to just say thanks, man. I know you got a lot on your plate still, managing the real estate game, firefighting and stuff. And thank you for your service, as a firefighter and sharing some insight and some time with us today on our podcast on, your investing and how you've done it. I hope it was helpful for our audience. I found it really fascinating. So I just want to say thank you so much for being on our show with us today.
Yeah. Hey, I appreciate the opportunity, and hopefully, like you said, your listeners got some value out of it. That's why, like you said earlier, I've been on a bunch of podcasts, because I just feel like it's a message that I need to get out there, that you can be a blue collar guy and make it. You don't have to be in a big hedge fund in order to be successful and really have a life-changing moment. And so I try to tell everybody about it and how they can get involved.
Yeah, no, I love it, man. I think it's a great inspiration for people. And, there's one of the main ways that people generate wealth in our country is through real estate. And you don't have to be rich to do that, but you got to start.
Yep. 100%.
Awesome. Well, thanks again. We appreciate you so much for being on the Armed and Ready podcast, Seth. Have an awesome day.
Thanks. You too.
Take care. Thanks so much for checking out this week's episode. Please subscribe, click the link below, share with your friends. And hey, if you know a military person or a veteran with a great story to share, we would love to highlight them on the podcast and get their story out to everybody. Thanks so much.